Hello traders, it's Angels FX with you again guys, and now in this video we are going to talk about order books and how to spot them. What is order books? Order books represent the levels of supply or demand where the institutions or like smart money and big money have left their big orders. There are two types of order books. A bearish order block, which is the last buy candle before the rapid move, and also a bullish order block, which is the last sell candle before the rapid move. You can call them also as a demand zone and a supply zone. So bearish order block is supply and a bullish order block is demand. After forming the order block, that rapid move breaks the structure upside or downside, where the smart money enters, and big money, also known as institutions, big banks, when like we talked about in session 1 about this. Big trading institutions and banks usually create these blocks, and if a bank is trying to enter the market at the best possible price, they will use order blocks instead of one large order. That's why it's important to know and to spot where order blocks are. So this is example of bullish order blocks, known as also as demand. So you can see we had this last selling candle before this rapid move. Okay, so this is our demand zone. Look, this is where the institutions have entered, because look at this volume. Boom. You know, like how much it costs to move just only with just one pip, but imagine this is like thousands of pips. Okay, thousands of pips. So this costs like trillions, billions to move like this in market. Okay, so that's why it's important to know when the institutions or big money, also known as smart money, enters. Okay, so this is another example. Look at this whole price was consolidating, supply and demand of sellers and buyers were fighting, and boom, look what institutions have done. Okay, this is example of bearish order block, known as also as supply. Look, we had this last buying candle after this downside move, this rapid move. Okay, so this is our last buying candle. Which one is order block? Supply. Here another example, this is our last buying candle before this rapid move. So this is our order block, known also as supply. So this is bullish order blocks example. Look at now, we have broken structure. Okay, so we have break of structure right here, and look, when we had this last selling candle, institutions entered the market. Look at this volume, buy. So we broke this structure and we had this huge large move, and what happened? Price tapped this demand zone and boom. So this is our first entry. So you could enter from here, and also smart money and the big money traders and professionals, also well-informed traders, enter from this market. Look, after this move, when the price touched our demand zone, look what happened. Another rapid move. Why? Because this is valid order block. So this is bearish order block example, supply example. Look, we had this break of structure downside. We had our last buying candle before this large move. So this is our order block. Look how price moved. Well-informed traders, smart money traders, institutions have entered the market, and boom, 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 price consolidating, moving upside, entered our supply zone. Look, again, another rapid move. Why? Because smart money traders, institution traders have their limits on these order blocks. So let's start with examples. So we have our break of structure, as you can see. So where is our last buying candle? Correct, here. So this is our supply order block, okay, known also as supply. So you can enter here. Why this one is valid? Because institutions have entered. Look at this engulfing candle, very nice, important, and also broke the structure downside. We enter here, our stops would be here, and our take profit would be here. Why? because we have this demand order block here. Look, 1 to 9. Excellent, excellent. Look, also price gave us nice reaction from this demand zone. Okay, there's like price moves with supply and demand and order blocks, guys. It's important to know. Again, another example, we had break of structure here, and price, look, institutions have entered. So let's mark. So we had our last selling candle, and after this candle, look at this volume. So we had this deep order block, and after it touched our order block, price gave us nice reaction. So we can enter. Sorry, let's delay this, guys. Sorry. So we can enter from here to our last order block. So this is our order block. So you can enter here, like you can enter here. This is our supply. So we know that we can have reactions from order blocks. So that's why we need minimum like less risking take profit. Our stops would be here and our take profit would be here. 1 to 8. Beautiful. Okay, beautiful. And also I will teach you in next session about this liquidity. Okay, so here is our liquidity. Why price and banks need liquidity? Many smart money traders and many retail traders will enter from here. Why? Because they will think we have breakout structure and we have this order block, and they will enter from here, okay? And their stops would be here. Let's mark with this. But they don't know that we have this valid order block here, demand zone and breakout structure. After this last selling candle, institutions have entered. Institutions have entered here and not here, okay? This is just liquidity trap. Look, that's why they have, like, people who entered and traders who have entered from these positions, they have stopped out. They lost trade. And price touched valid demand zone and gave us nice reaction. Again, let's start. Another example. We have breakout structure. So this is our last time candle, and many of you will have question. Okay, that's why you should always look for many time frames and not only one time frame. So why this one is order look? Let's go to 2 hour. So in week, we know that in weeks demand zones are hiding, order blocks are hiding. Okay, so this is our order block. Also, let's go to 1 hour. Let's see, because we have week. So in week, demand zones are hiding in order blocks. Let's go here. Nice. Look at this. Nice. Nice order block. Okay. Nice order block. Let's mark this. And what price have done? You can have your entry here. Now we'll take profit. Play this and make another one. Okay. Okay. Boom. And our take profit will be here at this supply, at this order block. Okay. You can take partials also here. 1, 2, 3. Nice one. But let's see. Why he's consolidating. Okay. Yes, we hit our take profit, as you can see. And you could have second entry here on this demand zone. But we missed, no problem. We still have this move. So this is how price moves, okay? Another example of demand order block. We hit our breakout structures and look at this volume. Look at this candle. What a large candle, okay? This is big money. A lot of volume. We had breakout structure here. And look, this is our demand zone order block. What price have done? It touched our order block and gave us nice reaction. And where is our take profit, this supply, this order book. So look, 1 to 70. If you risk $100, you would have that much. Okay, 1900 is our take profit. Okay, so this is like really nice. Okay, where you could also re-enter here at this order block. Look, another entry. Why? Because we broke the structure here and we had nice large move. This is our last selling candle, so this is why, that's why it's our order block. Boom, again. Also, you would miss it here. Okay, no problem. Take profit, same. 1 to 11. Nice. Here, another one. Let's go to our time frame to see if it's more clear. Yes, look. So we have this break of structure here. Okay, this is our demand zone. Why is our demand zone? Why is this our order block? Because this is our last selling candle. Look, price moves just like this. Buying, sell candle, and look at this volume. Look at these candles, buying candles. Okay, this is big money, large positions. So what we are doing, we are entering from demand zone order book, from our valid order book. Here our stop would be here, take profit, like entry price here, and our take profit, we can see this supply. Okay, why? But this is already mitigated, so you can have your take profit here at this liquidity. I will teach you in the next sessions. So another example on Euro USD, we broke the structure. Okay, so we broke the structure, and which candle broke the structure? Correct, this one. Why? Let's mark this indecisional candle, our order book. Why? Because look, boom, 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 and look at this. This move broke the structure, not this one, because we had this pullback, and after this pullback, this break of structure was confirmed. Okay, so this institution candle, engulfing candle, look at this. This large money, this is smart money, this is institution moves. We have a large volume here. That's why this is our order book. This is our last buying candle. This candle, this type of candles are really nice. This is called indecisional candle because price have not decided it should be like buying candle, like bearish candle or bullish candle. So that's why this one is nice and valid. So you would enter here. Our entry price would be here, stop loss here, and our take profit at its lows. 1 to 6. Excellent. Beautiful. Nice. Why this one is not valid in this range? We have not clear order book. Okay, we don't have clear order book, as you can see. Where is our indecisional candles or last buying candles, and where is our high volume moves? Yes, this one is here. Okay, this move, but this one is not valid. Why? Because we don't have clear team order book. We don't have clear supply. We have weeks. This is not valid. It should be clear. It should be beautiful, as we can say. Beautiful, nice candle, like this one. Okay, like this one. We have a lot of weeks. Price have not decided. It's selling, buying, selling, selling, buying. Okay, so you should wait for clear order books. This is our last move. Boom. Supply. We broke the structure. This is our last buying candle before this huge move, bearish leg. So this is called bearish leg. This when institutions have entered. Our entry would be here, and our stops here. Our take profit just right here. Okay, so we have a nice order block. So let's as our take profit, we can aim order blocks. So this one is our order block. Let's see if price have touched it. Yes, look, and price gave us reaction from this demand. This Like, this is how price moves. Literal. Order blocks. Order blocks move the market. Order blocks move the price. Institutions move the market. Okay? Large money moves the market. Look, our take profit would be here. Nice, insane. And people will say, oh, high IRR trades are impossible. It's not, it's unlogical. It's about the luck. No, you should know how the market moves. You should know how and why price moves. And you can make a lot of money and you can catch a lot of high quality trades. Okay? You would risk 1%. This is ATRR. So let's mark. If you risk $100, you would make 180. Okay? This is the power of high risk and reward trades. We broke the structure here. Okay? We had this nice order block, a nice bearish leg, nice large money move, smart money move. But what happened? We lost. No problem. No problem, guys. You cannot win all the trades, okay? Put in your mindset and in your brain. You cannot win 100% of trades. That's why it's nice to use high risk reward trades. Look, you lose this trade, no problem. You have won 80%. 80% minus 1% like loss, 1% loss, okay? Here you have 70% of profit. Amazing. If you lose 70 more trades, you're still in profit, okay? But if you lose 70% inconsistent, you are not a trader. You don't have knowledge, okay? It's impossible to lose 70%, 70 trades in row if you know how price moves and why price moves, okay? I hope you understand. So see you guys in the next sessions. Good luck and wish you all the best.